If you want to start a rental portfolio with as little as 3.5% down, or if you just want to pay less for your housing every month, then buying a multifamily home is a really great option that has a ton of benefits, and I'm going to tell you all about them in this video. A multifamily home is a structure that contains separate residential units, and this can be 2 to 2,000 units, but anything that has more than 4 units is considered commercial. And in this video, I'm specifically focusing on residential multifamily homes, so 1 to 4 units. Reason being is because there are tons of benefits if you buy as an owner-occupant. Benefit number 1 is that you can live in one of the units and then rent out the other unit or units, so you can lower and then sometimes even eliminate your monthly housing costs by collecting those rents from the tenants, who are also helping you pay down your mortgage, and sometimes you even see a profit from that if the rents that you collect are higher than your monthly payment. Benefit number 2 is that you can buy a multifamily home with as little as 3.5% down if you use FHA financing. And as of November 2023, Fannie Mae just changed the guidelines, so now you can use a conventional loan to buy multifamily homes with only 5% down, which is fantastic because it used to be 15 to 25% down. Benefit number 3 is that you can use down payment and closing cost assistance programs to buy multifamily homes. I do want to mention that when you use these programs in Minnesota, it comes in the form of a second mortgage, which may require you to occupy the home for the life of the loan. So it's possible that they will call the note due if they find out that you're renting it out. I will say that I've never heard of this happening before, but it's definitely important to discuss with your lender before you decide to go that route. I want to point out that I may mention how you can have a lower monthly payment and that you need a smaller amount of capital to get into a multifamily home, but I am by no means encouraging you to just go and spend every penny that you have on buying one. It's very important to have reserves, and you are going to need to set money aside or save money for when things inevitably break, because you don't only have to worry about yourself, you also have renters that are now depending on you. Moving on, so if you're thinking, well, I really like my privacy, I don't really want to share a wall with somebody forever, well, that's fine because you don't have to. You only actually have to live in the property for a year before you can rent out the entire building. So then you can go ahead and buy a single family if you want. Then you have the rental income from the entire building. Or if you can stand it for another year or 5 years, you can buy another multifamily property and do it again and again until you acquire as many rental properties as you want. If you buy a multifamily home as a non-owner occupant, meaning you're not going to live in the home, then it's considered an investment property and you don't get all the same benefits that you do as an owner occupant. An investment property normally requires about a 25% down payment. Your property taxes are slightly higher. You can't use down payment assistance programs, and your interest rate's going to be higher because the banks consider that more risky because you're a lot more likely to default if it's not your own residence. There are still more benefits of owning a multifamily home, but you get these benefits whether or not you're an owner-occupant. But for the record, I am not a legal or tax professional and should always refer to your tax or legal professional for tax and financial information and guidance. So, depreciation is a tax benefit that allows you to offset some or all of the income that you generate from a property. And of course, if you're living as an owner-occupant in a multifamily home, you can only depreciate the part of the home that you are not living in. And this is important because any of the rent that you get from the tenants is considered taxable income, but you can use depreciation to shelter that income from taxes. I don't want to go too far in depth into depreciation, but if you're super excited about it and you want to know more, I highly suggest reaching out to a real estate tax professional. They're obviously going to know a lot more about it than I do. I just have a very general understanding of it, and I would definitely hire that out. But it's super exciting because you can add up your itemized deductions, including your depreciation, and that shelters any income you get from the property. And then often on rental properties, you'll see a positive cash flow, but paper losses, and then you can use those losses to shelter any other more income from your regular job, up to $25,000, which you should also ask your tax professional about. Please let me know what you think about buying multifamily homes in the comments, but if you want to be prepared for more upfront costs, watch this video next.